Good afternoon. Welcome to the FTD University webinar titled Maximizing Your Profit with FTD. Today, you will learn the do's and don'ts of boosting profitability to help you optimize the financial well-being of your business to support a healthy bottom line. Derrick Myers, a certified public accountant and certified financial planner and president of Crockett, Myers & Associates, will be leading this informative webinar. As a business consultant, Derrick has developed financial strategies that are unique in the floral industry and have proven instrumental in the growth of many florists. While working with the floral industry since 1983, Derrick has perfected his floral analysis program, which allows him to break down financial statements to show owners where to focus their time and energy to reduce costs and increase profits. He also provides the expertise to guide businesses and individuals toward their financial goals through management advisory services, as well as tax, estate, and financial planning. Once Derrick is finished with his presentation, we will open the webinar up for questions. If you have a question, simply type it in the question box on the upper right side of your screen, and we'll take the questions in the order they are received. Please feel free to submit your questions during the presentation, and we'll just hold them until the Q&A portion of the webinar. So without further ado, I would like to turn the call over to Derrick to begin the webinar. Derrick?
Good afternoon, everybody. My name is Derrick Myers. Basically, I am the co-founder and president of Crockett, Myers & Associates, and we have been working with florists for 34 years now, I guess. And we picked up our first florist back in 1983, and this is kind of how we got into this because it was a very unique industry. And those of you guys that are in it understand the dilemmas that most accountants have. They don't understand the wire business, the ins and outs of the wire services, the fees and the commissions and how they get moved around. And we were no different in 1983 when we got our first florist. And what we found was, you know, we kind of had that same deer in the headlight look that a lot of florists get when we start talking financial statements. We had that look when we were looking at these wire statements and the commissions that are going back and forth, and we're trying to figure out how do we account for this. So back in the early 80s, FTD had their classes that we could attend. They were the Master Florist Manager classes, for those of you who might remember those. And we actually went to our first class, and of course we're there, and everybody's introducing themselves. You know, hey, I'm Bill's from Bill's Florist, and I'm so-and-so from so-and-so's Florist. And my partner and I are sitting there going, yeah, we're Derrick and Dave, we're accountants. And everybody kind of gave us this you know, kind of look like, what are you guys doing here? So we explained that we got our first florist. You know, they happened to be there with us, and we're saying we didn't understand the accounting on this. So we were at the finance class, which I believe was the first one, and, you know, so we're here to learn how to handle this properly. And they basically would pipe up that, well, hey, our accountant doesn't understand it either. And somebody else said, yeah, and ours doesn't understand either, and they're not here learning it. So needless to say, as we went through these classes back then, I think it was couple of years we had to take these classes every quarter. We finally came out the other end with our Advanced Master Florist Manager designations from FTD, and we had 10 florists as clients. And so we started working with this 10 florists, and we continue to work with them on a regular basis, monthly basis. We do write-up for most of our shops, and we do tax work for them. And as we worked with them, you know, they would refer someone else, and gradually our 10 became 15, became 20. And finally, we realized that, hey, we really understand this business now. We've learned it. We've worked with florists for a long time, and so we continue to do that. And I guess at some point we thought, you know, we should really market this. And of course, that's when the fun really started, when we decided we were going to market to florists, because you know, accountants and florists are like oil and water. They just don't seem to blend very well. So here we were at our first FTD seminar back in, probably it was about 89 by then, and we're at one of these seminars, or conventions rather, and we have our trade fair booth, and we're all set up, and we're wearing our suits and ties, and we're sitting behind the desk, and we have our pretty pamphlets all ready to hand out, and the florists wouldn't even make eye contact with us. They just kind of skirted by, wouldn't even look at us. So after doing this for a couple years and not really having much success, my partner's like, we're either have to make this work or you know, give it up. And back then, we were at the 6J meeting, which was District 6J, which was in Ocean City, Maryland, and they were having one called Bash at the Beach. So we thought, all right, this is it. He said, we got to do something different. So we set up a tiki hut. We did frozen margaritas. We did pina coladas. We set up a picnic table, or a big table with an umbrella and palm trees, and we had every florist in the entire convention stopping by our booth and talking to us. So that's how we finally realized how to market to florists. You don't try to talk accounting. You give them something to drink, and all of a sudden they open up to you, and then you get a chance to talk to them. So we get to talk to more florists in that one weekend than we did in 5 years prior to that. And once we started figuring out how to market to florist, we lost the suits and ties. You'll see me in a Hawaiian shirt anytime you see me now. That's basically become our thing. We're very casual, and we now work with 96 florists on a monthly or regular basis, doing all the tax work and everything. So that's how we got started into this industry. And we've been doing this, like I say, since about '83 was when we got our first client. So today, I'm here to talk to you guys about how to maximize profits with FTD. And, we're going to talk about some things FTD is doing. I really think they're doing some groundbreaking stuff to make wire business more profitable. And I think it's about time someone in the industry started taking steps to do this. And some of the things we're going to talk about today, as you'll see, are pretty groundbreaking. So what we're going to do is we're going to start with our areas of discussion for today. We're going to start with the business services that are offered through the wire services. We're not going to talk specifically FTD on everything, so some of this is going to be a little generic, but then we're going to bring it back, so we're going to talk about the business services and the member items that we have. Then we're going to talk about how to maximize profit on wire in business. What are some of the things that we can tweak, that we can do to make sure that we're hitting the profit margins that we need to hit. And then lastly, we're going to talk about the capitalization on the wire outs. I mean, one of the biggest things that's changed this industry in the last, 20 years or 30 years has been the shift in wire out business no longer being predominantly the florist business anymore. Now there are the order gatherers and things like that are actually capturing a lot of these business. It's not necessarily florists that are getting all these orders. So we want to talk about some things that maybe we can do to try to increase our wire out business a little bit, and there go kind of balance that incoming and outgoing a little bit, which I think is a lot of the key to making money when we're talking about wire service business is kind of balancing the ins and outs a little bit. So let's start with some of the business services. And basically, when you think about wire business and wire services, they offer us a lot of great services for our business. And it's our job to kind of go through each one of them and determine which ones are right for our business. So, for example, some of the things that they do for us, they have some really good POS systems. I mean, some of the I would say between FTD and Teleflora, they probably have the lion's share of the market in terms of POS systems. Very good. Prolific systems that give us, all the information we need, track everything, give us good sales records, give us marketing capabilities. They have, routing systems for our deliveries. I mean, they're very customized to what we do, and they're very good at what we do. They also do advertising, some on the behalf of the industry, also some that they can co-op brand with us and do some co-op advertising through the statements. We have the option to buy into those kind of services as well and do some of those things, all which help promote the business and the industry. They have some of the most florists have websites from one or wire service or another, so they produce a very cost-effective website for us. If you go out to try to produce your own website with a full, what do you call it? Ability to collect money and all that kind of stuff becomes very expensive. So they've been able to give us platforms for websites that are cost effective and very easy for a lot of us to maintain. A lot of florists can maintain them very easily. They don't have to do a tremendous amount of work. They'll give you images and things for the holidays. They'll help do some of that stuff for you. So with limited adjustments and things like that, you can keep a website very current, very fresh, and very cost effective as well. They also work with SEO, and they'll help you get that website found a little bit better. They can help you move that up in the search. I believe they're even getting into pay-per-click advertising now too, and can help you with that as well. Some of the other services they have would be like the answering services, the after-hours services. A lot of florists need somebody to answer the phones in the afternoon and evenings after they close. Some I have actually are aggressive enough that they'll have them roll over to their cell phone and they'll answer them all night long. I know I wouldn't do that. I would certainly rather have someone handle it for me on an answering service so that I don't have to deal with it. It's better to have somebody handle the phones on an answering service than it is to have a message, in my case, that just says, hey, call us back tomorrow. Because the problem is nowadays shoppers don't want to wait. Markets are such now that everybody wants instant gratification. They want to be able to do something right now, have it done and off their plate and not worry about it. If they get an answering machine that says, call us back tomorrow, our office hours are this and this, chances are you're going to lose that sale to somebody else who has a service that he actually takes an order or that they can order something online directly. So those are kind of some of the services. Additionally, they do credit card processing. This is a huge one. It makes it a lot easier when your systems all interface. The websites interface with the POS systems, interface with the credit card systems. I mean, that's some of the power that we really get from these services that are being generated by the wire services. So clearing credit cards, usually very cost effective. I've shopped it with a lot of shops, and it's very rare that we can actually go out somewhere outside of the systems and find a much better deal. It happens occasionally, but not all that often. The directories, if you're trying to expand your incoming wire business into different areas, directories are a great way to do that. You can get your extra listings. If you're adventurous enough, or if you think there's, you want to do those, you can do card ads as well, things like that. Those are some things that you can do that you have the choices to do to increase your circulation or your exposure. Wire services will also capture your SAF dues for you. They'll collect those for you and remit them to SAF on a monthly basis, so you don't have to deal with a separate bill, another transaction that you've got to handle every month. So they'll do things like that. They also offer us product. We can get hard goods through them. We can get specialty containers through them. We can also get cost of flowers, things like that. They're working on getting better and better flowers to us and more timely and more cost efficient. So there's always the different flower buyer programs that are out there that are being sponsored by a lot of the wire services now. And then, lastly, they have some of the best magazines in the industry. When you look at, the websites, the wire services, some of the best websites and best magazines are produced by the industry. So these are some of the services that we can get from them. And again, these are all services that we choose to buy. And, they're not thrown upon us, or we have to do it. In fact, it's our job to not buy everything on the shelf. If you were walking into a CVS or a Walgreens, you wouldn't grab a cart and start driving down the aisle and throw one of everything into your cart. You look at what's going to work for you, what you need, and those are the things that you buy. And we have to do the same thing when we're looking at the services that are provided through the wire services. If we can find something that works better for us outside of the services, well then great, buy it there. But if there's something that they can provide that's cost effective and it works very well for you, then it makes good sense to buy it through them. One of the important things to understand, though, is when you're analyzing the profitability of a wire service, you can't hold against them these services that you're choosing to buy through them. So when you're looking at profitability, you don't want to consider these as a cost, because these are costs you'd have to reproduce somewhere else outside of the wire service. So that's kind of what goes on there. All right, let's talk about these statements that we get. And I hope you're all reading your statements. There are a lot of things on these statements, and I know they can be pretty daunting when you look at them. Some of them can be several pages long. I've seen wire statements that go over 100 pages long. They can get very, very long. But they're broken down very methodically and into different departments. And if you look at the statements, on the front page there's a recap of each of the sections, and then those sections are broken down in detail on the later pages. So all you have to do is look at a section, go into the detail, and look at what's in there. By doing that, you can find out what services you are paying for, and you can see and you can make sure that those are the ones that you need. And so we're going to talk about some other things too, but you really have to understand, you got to spend the time to look at these statements at least periodically to find out what you're paying for and know what you're buying. So it's very important to do that. The other thing you have to do is, when you're looking at these statements, there are fees on there and charges that you possibly could be avoiding, but because you're not paying attention to them, or maybe you don't know the rules that are causing them, you're getting charged with extra fees and possibly things that we could be avoiding. So those are one of the reasons we want to look at the statements. All right, some of the things that we're going to find on there, in addition to the things we talked about earlier, are like the membership items. And these are the things that we can't necessarily avoid all of these. Dues, we have to pay our dues, and they generally change in dollar amount based on how much volume or how much we do with the wire services. We have the quality assurance programs and the education program to make sure that the quality of what's being done in the flower shops is there. And again, that's a monthly fee that we pay. One of the fees that we can avoid, but if you haven't noticed it on your statement, there's a paperless statement fee. So basically, the wire services are charging us roughly about $4 per month. Usually it's $3.99 or $3.95 per month to receive a paper statement. And nowadays, with today's technology, who needs a paper statement? All we have to do is sign up for the electronic statements and go online and print them ourselves, and we can save $3 to $4 a month. It's not a tremendous amount, but it's $48 a year. I mean, so it adds up pretty quickly. So understanding all these little fees can make a big difference. Reciprocity fees are one of the ones that we really can avoid with proper planning, and that's one of the things we want to talk about is what can we do. So basically, reciprocity happens when you have multiple wire services in your business and you're sending and receiving for multiple services. And you're doing it on an unequal basis. So you're doing your sending. Typically what happens is we own one platform or the other for our POS system. So it's easier to send an order through our POS system and we don't worry about it. Well, what happens is then the other wire service typically charges us a reciprocity fee because they're not getting their portion of the sending. So with proper planning and a little bit of effort, we can rebalance those sendings through our system, and we can avoid the reciprocity fees. Quality programs we're going to talk about in a little bit more detail on the next slide or two. But then they have floral selection guides. I mean, you all know what they are. You've all seen the books. Of course, we pay for those. And they give us some of the best pictures and things that we use for funerals and for other things. So again, wonderful books and things that we can use. Low sending fees also happen to do with multiple wire services. If you're not sending enough volume through one particular wire service or the other, they're going to charge you a low sending fee. So it's very similar to a reciprocity fee, only it's a flat charge. So those are some of the membership items and some of the things that we can come across on our statements. And it's important that we understand which charges are optional and which charges that these are not necessarily optional charges. These are going to be imposed on you if you don't, avoid them where you can. Now, quality assurance programs, these are relatively new in the last couple of years. But what they really do is there are fees that are imposed on us if we don't really handle something properly. So typically FTD imposes their delayed response program. So if you don't reject an order within 2 hours of receiving it, they'll basically give you a fee for that. So again, proper planning, we can avoid this. Same with FTD delivery confirmations. They require that we confirm all deliveries by 7 p.m. local time. And if we do that, then we don't get any fees. But if we miss them, then there's going to be fees associated with that. So, our job is to make sure that all of our staff understands how these fees are where they originate and how we can avoid them. So with proper training in our staff, we really should never have delayed response fees or delivery confirmation fees, because that just means we blew it and we didn't do something that we should have done in a proper time. So again, by understanding where these fees are generating from, and where all these things come from, which ones we can reduce and which one we can eliminate altogether. I mean, that's what we got to figure out. And with proper planning, we can avoid quite a few of these fees. All right, so that's the basic beginnings. Now let's get into the meat of this, and this is really what I really am excited about, because there have been some changes in the way FTD is starting to price out their orders. Now, they all haven't been redone yet, but they're working on them, and this is kind of like the new pricing model. So basically, in case you didn't know it now, FTD's average order is now $70 that goes through the network. So their average order has been moving up steadily. They're up to $70. Yes, they still have orders that come across at $30 and $29.99, but the average order is $70. So they've definitely moved the average order way up. So that's what I'm going to use as an example, just to kind of show what's happening now. We always give up 20% commission to the sender. So that would be the sending, whoever took the order, they get the 20% commission. And then we do a 7% clearinghouse to the wire service. So that gives us $51.10. What FTD is trying to do now is they're trying to make that the fill to value number. So essentially, we're having a $70 order. We're giving up the 27%. We're left with $51.10. The new model FTD is working with now is to try to get the recipe so that the cost of the recipe prices out to $51.10. So that's very new, and any of you guys have been doing this for a while realize that we always used to filter value to the SRP, which was the suggested retail price. So they're trying to change the whole way this works a little bit to give us a lot more profitability in the order. So based on that, the next thing we get to do is we get to take our $10 delivery out. So we take the $10 delivery out in full. The 27% has already been applied. Now we get to pull $10 in delivery off of our filter value number. 35% cost of goods is pretty much an average in the industry. FTD is actually shooting for 32 in their targets, or 33. I'm being a little more conservative here, but again, 35% of the $51.10 comes to $17.89. And then, of course, we have labor, and this is just the design labor. I know there's probably a little bit of labor involved with the office. Maybe somebody's got to handle the call. It might have to be scrubbed coming into your point-of-sale system, depending on who you're working with. So it could be a little bit more labor than this, but this is just on the production side. So 15% is typical design labor. $51.10 times 15, $7.67. So basically, on this order, we have a contribution margin of about $15.54, or 22% of the $70. So with this kind of pricing, there's a lot more profit than what used to be in the old model. The old model would have based the cost of goods and the design and the delivery or the design labor on the $70. In that instance, that would drive the profit on this order down to $6.10, or about 9%. So this is a big difference in methodology, what they're trying to build us now. Now they basically have told me that they haven't worked all the recipes this way yet, and they're starting to go through them one by one, redoing all the recipes. So when this is all done, this is really going to be, in my opinion, a game changer for the industry. It's going to give us a lot more profit in the incoming wires. Instead of the traditional 8 to 12%, we're going to be looking at somewhere between, I think they're projecting between 17 and 24%, 25%, depending on the size of the order. Because it's important to understand that as orders go down in value, the percentage of profit is going to drop a little bit too, because we're taking a straight $10 off for delivery. So if we take $10 off of a smaller order, it's going to be a larger percentage, which means our profit margins are going to drop a little bit as we get smaller. So when we get closer to $35 arrangements, the profit's not going to be 22%. It might be 16 or 17. But when we get into orders that are $100, $123, we might be making 28, 30%. Okay, so this new model, in my opinion, is a game changer. Now, of course, in the meantime, you're going to have to make sure that when you you're still going to filter recipe. Of course, they're redoing the recipes to work this way. You're still going to have to make sure that as you fill the recipe, you're getting the right amount of product in there, and you're still going to have to fill the recipe. And you may not make quite this much profit until you get all of them reworked, but still, it's definitely a game changer. It's heading in the right direction. One of the other things to consider too is the size of your shop. The bigger your flower shop is, the more volume of flowers you buy, the more flowers you move, the cheaper those flowers become. So typically when I'm looking at a flower shop, when I price 35%, I'm looking at a flower shop that does, below 750,000. Below 750,000, I find the average cost of goods is about 35%. If you go for fresh flowers, if you go, and that includes when I say cost of goods, I mean everything from the fresh flowers to the container to the oasis to the ribbon to the picks to the cards to the cellophane wrap to the ribbons. Anything that walks out the door with that product on a fresh flower arrangement, small shop average is about 35%. As we get larger, it tends to drop to 32, to 30, to 28, to 26, the bigger and bigger your flower shop gets. So, there are different points, different break points that we use for flower shops of where we target their cost of goods. So all of these things will make a difference into your profitability. So the larger you are, an order like this, you're even going to potentially have more profit on than what we're showing here. So that's kind of the new stuff. And again, it's really important to understand you still have to fill the recipe, but they're trying to restructure everything so that the fill to value is now based on the discounted order, not the 100% of the sales order, which is a huge step in the right direction. Okay, so how can we become more profitable? So obviously FTD is trying to help. Other things that we can do, one of the best ways that we can make the most money with wire business is when it becomes what we call incidental business. And some people agree with me on this, some people don't, but this is a position that we hold very strongly to. We feel that there's a point in your business where You already have all your designers working around the table. You've got your drivers. You've got everybody's in position. You've already got all the people there. You're paying them already. There's a certain number of orders that you can accept that your designers can handle, that your drivers can deliver, and you don't have to pay any more time, any overtime. They can just fit it into their daily routine and they can get them done. We feel that the incidental number is about 15%. We feel most flower shops can handle a 15% increase in volume without having to hire additional people or have people work overtime or work extra. Now, granted, this may not be the case on the holiday. You may already be at capacity, but for the average day, about a 15% is incremental business. So what does that mean? Well, basically what that means is in the case of the example we were just showing back there before, instead of a 22% profit, now we have a 37% profit because theoretically there's no labor on this order. So if we're doing a small volume, below the 15% of incoming business, that small volume is even more profitable than what we were just showing on the other page because we don't have a labor associated with that. We've already paid for the labor whether we do that order or not. And to me, that's where we can really make a big profit in wire-in business. Also, one of the things we have to consider with wire-in business is balance. And I talked about it a little bit before. The reason I use a 15% position is because I've always held that we should have 15% incoming, 15% outgoing. If we have a balance there, then the commissions we earn on the outgoing offset what we spend on the incoming, and it really balances our profitability. So trying to keep a balance, trying to keep an incidental level, but of course with profits like 22%, that would entice me to even go well above the 15% incidental limit that we've always tried to put in place. So it's definitely changing the industry a little bit, I think. One of the other things you've got to do with incoming businesses is crucial, is you need to reconcile your sales reports with your statement and make sure that all the orders that you're filling, you're getting paid for on your statement. Because here's what happens. There are a lot of times that orders are called in by phone and they don't get reported, be it by accident, be it on purpose, don't know. But they'll be called into you, you fill the order, but it never gets reported to the wire service. So what happens? You don't get paid. So unless you're reconciling your statement and saying, hey, wait a minute, I filled order number such and such and I didn't get paid for it, then they can go back and find out where it originated from and they can make sure you get paid on it. A lot of times call-in orders don't make it to the statements, and if you're not picking them up, you're going to miss them. So it's something that you definitely want to look at. I've found that reconciling wire statements can generally make you about $400 a month on the average wire statement. So it can pay for a lot of time to reconcile these wire service statements, and it usually doesn't take that long. Some of the systems now will even reconcile. They'll even take the wire service statement and match it to your sales reports. So you've got to do this. It's crucial. If you're not reconciling your statements, you're leaving money all over the place, and you're talking about why you're not making a profit with wire business, and this is one place that we give up a lot of it. All right. So a lot of money's being lost here, and you need to go after that. All right. That's wire out. That's wire ins. Let's talk about wire outs a little bit. And what's all the fuss about the wire outs? Here's the problem with the wire outs. It's probably the most profitable side of the business in the sense that we get a very good commission, and I'll give you an example in a minute, but we do have to advertise, but what you need to be doing for your business is you have to advertise your ability to deliver not just locally but also around the world. So as a florist, through the wire service, through FTD and through the other wire services, we have the ability to send product anywhere in the world. And we have to make sure our customers know that and they come to us instead of going somewhere else. Quite often they go online, even if they're typing in your business name, the way some of these wire services or some of the order gatherers are marketing, they'll put your name in the line so that they come up above you or come up right with you. So you've got to make sure your customers know who you are and that they know you deliver and they contact you directly and they're looking for your website directly and they find you, because it's so important to do that because outgoing business is very lucrative. Another thing we're going to do, and we're going to talk about in a little bit, is analyze your delivery area. Make sure your delivery area is efficient in what you do, and when it goes beyond that, then we need to make sure that we're wiring those orders out. Again, capturing on that wire out instead of maybe trying to deliver too far and not having the profitability on the delivery. So let's look at a wire out. What's all the fuss about? Well, here's basically what happens. That same $70 arrangement that we were just talking about, the sender, they get to keep that 20% commission, $14. Not too bad. They also get to keep the service fee. Now, I'd say the average service fee I see is somewhere around $8, maybe $7.95. I've seen them as high as $12.95, $14.95, $16.95, even $18.95 for a service fee. So some of these wire services or some of the order gatherers are getting fees that are as much as the commissions, if not more. So they can be even much higher than the example I'm showing here. Also, they get a rebate for being the big senders. Senders get the rebates. And so sending shops get a rebate. $4 is probably an average rebate, and I know they go a lot higher too, depending on how many orders are being moved. So in a low example, they're getting $26 on the order, which that's 37% of that $70 cost order. They're getting 35% profit on an order that they're not doing anything but taking the phone call. Now, they are spending a lot of money in advertising. I get that, but 37%. Plus, if their service fees are much higher than what I'm showing, or their rebates are higher than I'm showing, it could push 40, 50%. So they can capture a lot of money on the outgoing order. And, again, that's money that if we can capture it, we want to try to capture it too. So you need to make sure you're marketing in your area, that you're marketing very hard, you're talking, to your customers. They know you can send orders everywhere, that your websites say that if you can afford to do it, you're doing pay-per-click advertising and you're marketing so that you can capture your share of this business as well, because there's a lot of profit here. All right, so let's talk about delivery areas and how we can analyze those and what are some of the things that we can do here. When I look at a typical delivery area, what I typically see is this, and believe it or not, there's a little circle in the center of that. I know it's hard to see right now, but most of my florists will start with a base fee for delivery, and $9.95 is probably about average. It might actually be about $10.95 now. It's been going up over the last few years. As they go a little further out away from their shop, they charge a different fee. It might go up to $12.95. And we go a little further out from that, maybe it's $14.95. You get the idea. So the further we go out, the more expensive it costs. The reason is, it costs us a lot of money to get a base delivery, and average delivery is about, if you break it down in the country, I'd say average delivery for a florist is probably somewhere around $9.30 to maybe $9.50, depending on where you are. And even with a base fee of $9.95, most shops are just breaking even, because there are a lot of places that they'll give free delivery to, or maybe for discounted deliveries to funeral homes or to hospitals. So we give away some of our deliveries, and we don't get quite as much as we should. So what we find is it takes a certain number of deliveries per hour to make a profit. My numbers are it takes 3 deliveries an hour for a driver to cover their wages and make a profit on the delivery department, cover all the cost of delivery. So what we have to do is make sure that our drivers are efficient and that we have enough orders to get them that $3 per, three deliveries per hour, which is where wire-in business can help. So even if we might be going into an area that we normally charge $12.95 for or $14.95 for, if we have an extra delivery on the truck that we're now being paid $10 for, and again, that's one of the other, we're now being paid $10 for that delivery, it's important to understand that, okay, maybe it's less than our $12.95 or $14.95, but if we're already going there, and now we're going there with another delivery for $10, it's going to increase the efficiency of our drivers. It's going to increase our profitability in the delivery department. And then once we get past a certain point and we realize, hey, this is too far for us to go and be efficient and make money, then we need to draw that line in the sand, and then we need to wire out. So we need to find a good network of florists around us that go into those outlying areas that we can't quite deliver to, and know that we could wire out to them with confidence. So make friends with those people, those florists in those areas. Get good relationships with them. Make sure they know you're going to give them a good product, a good fee, and you'd like them to handle those wire outs for you. And reciprocate to them, in kind. If they want to send something to your area, make sure that you're willing to reciprocate for them. Because one of the problems that we've had with wire business, especially florist to florist, is that a lot of florists aren't accepting the orders. So if we know we're going to make money on these orders, and again, if we're pricing them properly when we take the order, we know what we'd want on an order. If we price it properly, when we go to wire it out, there will be a lot of shops out there that are willing to take it for us. So basically, that's kind of wire out. So we want to make sure we do that. So basically, that's what I've got. In conclusion, what I want to say is, make sure you take advantage of the businesses' services that are available through your wire services. Shop them. Make sure you look at all the different costs. Make sure you are taking advantages of the services that they do offer for you. Look at and understand the things that are on your statements that you might be able to avoid or eliminate. Try to keep those down as much as you can. And then, of course, evaluate each wire in that you get. Look at the recipe. Make sure you're going to be able to make a good profit on it. And there are times when some orders that you might have to reject because the profit's not there. But make sure that you're pricing it, you're looking at it, you're evaluating it, and then don't just reject it based on the dollar amount. Make sure you're looking at the pricing, looking at the recipe that's in it, and if there's profit to be made there, go ahead and make that profit and take it for yourself. And then, of course, also maximize your use of wire outs. Try to get the wire out side of the business up a little bit. And again, there's a lot of profit in that, and that's where you're going to see some good money coming in as well. So basically, I believe that's, if you do all of these things, it's going to help you maximize your profit with FTD, help you maximize the profit in your business, and that's what I got for you guys. So with that, thank you very much, and I believe we're open for questions.
All right, Derrick, thank you so much for sharing a lot of great information with us. We really appreciate that. As we mentioned, we are now open for questions. And remember, if you have a question, simply type it in that question box on the upper right side of your screen. And we do have a few questions already. Terrence wants to know, he said, design labor has always averaged 25%, not 15%, and higher on funeral and weddings.
Design labor is priced at that. It actually doesn't average that. When you look at the actual expenses for design labor, our target is 15%. Now, when I'm pricing work, when we're pricing wedding work and we're pricing other work, yeah, we target, I think general work is about 20%, and then, as we get into wedding work and some of the other stuff, funeral is usually 30, wedding I've seen as high as, 30, 40, 50, depending on how intricate it is. But typically when we look at the actual cost of delivery labor as a function of a range or of sales, of inventory sales, our targets are 15%. And so that's really what we're using here is what we find is the average cost, not necessarily what we're using to calculate our sale price. Because that's got some profit built into it as well. So I think that answers that, I hope.
All right, we've got another question from Keim. It's a little long, so bear with me.
Okay.
On your discussion of incremental orders, are you saying that we should accept orders that we feel are priced below what we consider to be a profitable price simply because the staff is already there and the rent is already being paid? In other words, once we enter the incremental zone, our only consideration should be filling that order because our only costs are the COGS because all other costs, labor, delivery, overhead, are covered?
That's a good one. I'm going to say that I would still want to evaluate the profitability of the order in its truest sense. But yes, I really do believe that if you're in the incremental zone, you can take an order that may be questionable to your profitability. It may, if you had to pay that person to come fill that order, you probably wouldn't have a profit, where there could be a profit if all of your costs are already covered. So yes, if it's incremental business, I think there's profit to be made there, where there may not be in other situations. I still would recommend evaluating each one and looking at it. One of the other issues that you have to face, when some of the orders get very low in price, one of the difficulties that we face is the perceived value of the order. Because a lot of times, depending on where the order is taken, the cost can be a lot more than what we're filling to value, and we've got to make sure there's perceived value there. And I know with the recipes and things and the pictures, that's going to be taken care of in the future, but you still have to make sure you're going to be filling the value and that there's good value for the product, or else you're going to get complaints on those orders. And if you get complaints, then all of a sudden any profitability that you may have had is going to be gone. So I would definitely look at each order and evaluate each one in turn and make sure that you feel that you're putting good value out for what you're doing, and not just look at it that it's incremental, I'm going to make money no matter what, and send it out. So I hope that answers your question, because it's a tough one.
All right, we've got a question from Aaron. Why aren't you showing the $10 delivery as part of the profit since they get that too?
Oh, good question. What's happening with the $10 in delivery? And again, I kind of alluded to it a little bit. Uh, One thing I want to point out first, FTD's new pricing model gives us a pure $10 delivery fee. I believe it's the only one that's doing that. Typically, the delivery came out of the $70, so it was part of it was coming off the top. Now, they're taking it out of the recipe value or the fill value, the Merck value, which is the $51.10 in my example. So it's coming off of that number, which has already been reduced by the 27%. So they're giving us a full $10 for delivery now, which is really good. Also, what's happening, why I'm not showing that as profit, is because, like I said earlier, the average cost of delivery is about $9.30, $9.60. So that $10 is really just paying our delivery. We might be making a small margin on it, but there's not a lot of profit there, so I'm not even counting that difference into the profitability. But they are completely covering our cost of delivery by giving us the full $10 now, which is an awesome change.
Great. We've got a question from Becky. She wants to know what exactly is included into the cost of goods: flowers, vase, wholesale, retail.
Yeah, when we use the 35%, we're putting everything in. It's being calculated at wholesale cost. So these are your costs plus freight plus shipping in. So what it costs you, landed cost into your shop. Plus, it's not just the flowers, but it's the containers, it's the oasis, it's the ribbon, it's the foam, it's the tape, it's the wire, it's everything that goes into that arrangement. If it's wrapped in cellophane, if it has a bow, whatever, anything that goes as part of that arrangement is included in that cost of goods number. And it should run you, between 33, 35%. Again, based on the size of your business, it could be as low as 26. But and just for a breakdown, let me give you those where we break those off. Between 0 and 750, we're shooting for about 30. On an individual order, we're shooting for about 32% as a target cost of goods. But we know there's going to be some slop in there, which is why we shoot for 35. For a shop that does between 750 and about 1.5 million, we're shooting for 30%. And then when we go to 1.5 million to about 5 million, we're shooting for 28%, and above that, we're shooting for about 26%. So just kind of give you an idea of where those breakpoints are. And but yeah, I hope that helps. So it includes everything that goes into the order at a wholesale pricing.
All right, we've got a question from Jennifer. In regards to a POS system, what should the system or programs on the system offer to help your business run efficiently?
Wow. I think in order to be efficient, they've got to be user friendly. They've got to be easy for you to train new staff on. I think they need to be integrated with your website and your cash, be able to collect orders right online and go directly into your point of sale system. I think you should be able to clear your credit cards through there. Keep it simple. I love the delivery modules. I think you should have a good delivery module because I think that makes delivery much more efficient. I think those are some of the major features that you really need to have. But it also needs to give you good reports, good sales information, be able to track your sales by the type of sales that you're doing. You need to know whether you're selling fresh flowers, plants, balloons, things like that, because they all have different margins, and they're all going to affect your cost of goods when you're analyzing your profitability. So a good system is going to give you all that information plus a ton more. It's going to help with your marketing. It's going to do website stuff. It's going to do reminders. It's going to do all kinds of good stuff. So I hope that helps.
All right. We've got another question from Terrence. How is the fill to value ever going to work for most rural areas? Like it's smaller shops.
With smaller shops in rural areas? Well, as long as they can buy the product at the right cost. I mean, I guess that's really the question: is can we get the product in cost effectively and keep it within recipe? I guess there's always going to be some areas with very small shops that are going to have a difficult time because they're going to be paying traditional wholesale pricing. But I know FTD, I can't spill the beans, but I know FTD is working on something there too. But I don't know how else it's going to be. If you can't get the product in at a good price, then you may not be able to reach quite the profits that they're projecting. So again, that's where you're going to have to analyze your individual recipes and your pricing and make sure that you're making money on them.
All right. Just as a reminder, if anybody has any questions, simply type it in that question box on the upper right side of your screen. All right, we've got another question from Sonal. Her question is something about needing to deduct the cost of other wire service charges, such as the monthly fees, Mercury, that add up to about 4 to 5%.
Yeah, all those fees are, we're just looking at the contribution margin here. We're not really looking at all the fees, and that's a very good point. Thank you for pointing that out. When we generally, part of our analysis is we actually do a profit and loss statement for each wire service. So, yes, you'd have to look at, what you're bringing in business, what your cost of goods are, what your overall contribution margin is, and then take off those other fees that we talked about at the beginning, but we didn't deduct any of them. So you got the dues and the other fees that come off there as well. But again, those would be part of your determining your profitability. Any other questions?
All right. I think that's it.
All right. Very good. Well, thank you, everybody. I appreciate you all being on the call, and I hope you found this information valuable. And if you have any questions, my email's here, and feel free to give me a shout anytime. Appreciate it.
Yep, we just want to say thank you to everybody for attending as well. If you missed a portion of this webinar or would like to view it again, a replay will be available at FTD University Online later this week. The webinar materials are available at ftdi.com. Just click on the FTD University logo on the bottom of the home page and click through to the webinar series page. Of course, we'll be sending you a very brief survey to gather your feedback on today's webinar. So we ask you to just please complete this survey to help us improve future webinars and our other education programs for you. The next FTD webinar is scheduled for Tuesday, August 11th. FTD Education Consultant J. Keith White, AIFD, will share his expertise of revenue-generating merchandising tactics. He will show you how to set fixtures in a pattern that allows for maximum traffic flow based on the 3 most popular store layouts. The registration is already available at ftdi.com, so please be sure to register as soon as possible to reserve your spot. FTD is also holding the 4th Annual FTD Makeover Magic Contest in conjunction with Keith's webinar in August. The details and official contest rules can be found at ftdi.com/makeover. Again, thank you, Derrick, for sharing a lot of great information on boosting our profitability to help us maximize the financial well-being of our business. This concludes FTD's webinar, Maximizing Your Profit with FTD. Thank you.